You walk into a bank, and deposits it into the bank again. Now, the bank has $190 on paper, even though only 100 ever existed. This is called fractional reserve banking, a beautiful trick that quietly allows banks to create money from thin air. Banks aren't vaults, they're factories, and their product is money itself. Interest, the invisible tax, but creating money isn't enough. Banks wanted profit, real, consistent profit, so they invented a machine called interest. Every rupee they give out comes back with a twin sibling attached to it. A loan of 10,000, you return 12,000. The extra 2,000 is the bank's cut for using your own money. It's quiet, it's simple, and it works every single time. ATM fees, maintenance fees, convenience fees. But what happens when millions of people put their salaries into banks every month? Banks realize something. They don't have to wait for loans to earn. They can charge people for accessing their own money. A TM fee, withdrawal fee, late fee, maintenance fee, convenience fee, and the worst one, minimum balance penalty. Banks earn billions from people who don't even have money in the first place. It's the quietest business model in human history. Then banks invented something dangerous and delicious. A credit card, the perfect illusion of free money. Swipe, swipe, swipe. No consequences. Swipe once, and suddenly everything feels affordable. No hesitation, no second thought, no cash leaving your hand. Just a plastic promise. But the moment the bill arrives, that promise breaks because behind the bill, there are invisible shadows: interest, penalty, late fee, service charge, compounding interest silently increasing each day. A simple 20,000 rupees swipe can quietly grow into 38,000 rupees if you miss just a few payments. Banks don't need you rich. They just need you predictable. They don't want your wealth. They want your habit. They want you to keep swiping. Then came EMIs, and suddenly, everything became affordable. Phones, laptops, TVs, furniture, vacations. But here's the secret. EMIs don't reduce the price. They reduce your awareness. The interest gets hidden. Processing fees get ignored. Insurance gets tucked inside paperwork. Banks learned something powerful. If they break a mountain into pebbles, people will gladly carry it, one monthly payment at a time. Next came overdraft, a small loan disguised as kindness. Your account goes below zero, and instead of declining the transaction, the bank says, "It's okay, we got you." But overdraft isn't help. It's debt, wearing a friendly smile, with interest sharp enough to cut through metal. You think you borrowed 5,000 rupees, but the bank knows you've entered the trap. Banks realized they could own decades of your life. Home loans, car loans, education loans, business loans. You borrow today and pay for the next 20 years. Interest turns into rent for wanting something sooner. Debt becomes a companion, a constant, a silent shadow. Before a student earns their first salary, they owe someone, and that someone is the bank. In the past, people visited banks. Now, banks visit people on their phones, into their pockets, every minute. Notifications, statements, due reminders, auto pay, auto debit, auto renewal. Convenience becomes dependency, and dependency becomes captivity. We are connected to banks every second. Here's the truth they never say. Your money doesn't rest. It gets deployed, invested, lent, traded, multiplied. The moment your salary hits the account, it begins working. Not for you, but for them. You take the risk to earn it. They take the profit from using it.